Today, what we're going to talk about is what happened yesterday and why the stocks really pulled back yesterday. And they actually were faring well today. Stocks then retreated today. And why do we talk stocks on a real estate channel? It has a lot to do where the markets are taking us right now. So we have to figure out where stocks and equities are going. That'll also give us a focal point or kind of figure out what's going on in the bond market. Thus, we'll figure out what's going on with these things over through here. A little bit confused? Let's get to it. So here's what we see in today's news. The market's down another 330 points, and basically what it's saying is everybody's waiting right now for the jobs report tomorrow, because let's recap what happened yesterday with the Federal Reserve. So the Fed came in and they said, okay, we're not going to cut rates. And then they painted this great picture of the economy. And that's why I was like, okay, that sounded good. Well, why aren't you cutting? Well, that's now the dilemma. Now, what Wall Street's saying, and now I'm going to have to agree with them, is now the Federal Reserve is hell-bent on waiting to cut rates until basically the job market starts to crack. So we're going to focus in a little bit today on what's going on in the job market, because that's basically the trigger point that the Federal Reserve's giving us. So we're going to take a dive into the numbers. We're getting a lot of numbers in for tomorrow. That's going to give us the true unemployment rate. But I want to first jump over to CNBC and bring it over to Rick Santelli so he can bring us up to speed on where we are so far today with a lot of this stuff. Then when we come back, I'm going to show you the top worst cities in the entire country looking to buy, and they are down double digits, folks. So I want to talk about those, because not always on this channel do we talk about home prices always going up and stocks always going up. I will bring to the forefront when I see some declines in areas, so I want to point those out today as well. So I'm going to highlight some of the worst areas in the country right now to be living, because your home prices are really crashing at this point. But first, let's get over to Rick Santelli, see what he has to tell us on all the let's say the financial news that the Federal Reserve is monitoring right now, because they are now in the control of where mortgage rates and interest rates are going to go from here, unfortunately. So let's get over to Rick Santelli to give it to us. Rick, take it away, buddy.
Welcome back to Squawk Box. Rick Santelli here live on CME HQ with the breaking news of the morning. We have jobless claims, ECI, employment cost index, and personal income and spending. Let's start with income. Remember, last month we took a ding, minus 0.4%. That was weakest going back to the fall of 21. Rebounding up 0.3, a tenth better than expected. And that would comp to, April, we were up 0.7. Now let's look at personal spending, up 0.3, a tenth light, but a nice reversal before any revisions from the minus 0.1. Up 0.3 would comp to March, when it was also up 0.7. Let's look at real spending, accounting for inflation, up 0.1, exactly as expected.